I absolutely still believe we're in a bull cycle. Obviously, the bull cycle has been a lot more concentrated in Bitcoin versus a lot of the other altcoin sphere. And at the end of the day, right now, we are experiencing a lull in liquidity fiat money generation. Again, this is a short-term pain. We're clearing out the dead wood. We had a great run from 20,000 to 110 on Bitcoin, essentially, FTX lows until, Trump coin. And now we're having a 30% correction. It's pretty normal for a bull market. So I think, yes, people might have had a little bit too much leverage. Maybe they bought too many shit coins, but I think we're going to clear out all that dead wood. And I still believe that we could be 250,000 Bitcoin by the end of the year.
The crypto market is in the midst of a wild ride, with Bitcoin pulling back after soaring to incredible heights. But here's the twist. This isn't the end, it's the beginning of something massive. Arthur Hayes, a crypto visionary, sees this market dip as the perfect setup for Bitcoin's next insane surge. While others might see the current market correction as a sign of doom, Hayes remains confidently bullish. He believes that these pullbacks, where the market sheds excess weight, are essential for the next explosive rally. We're clearing out the dead wood, Hayes says, referring to the over-leveraged positions that have built up during the previous run. This is nothing new in the crypto world. In fact, corrections are a natural part of a healthy bull market, paving the way for future gains. And the big prediction? Hayes is calling for Bitcoin to hit an eye-popping $250,000 by the end of the year. Yes, $250,000. While many are worrying about short-term fluctuations, Hayes is focusing on the bigger picture. For him, the correction is just a stepping stone to an even bigger rise. So, while others panic, Hayes sees this as the perfect time to get ready for Bitcoin's next massive leap. Let's watch clips from Arthur Hayes' explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
I absolutely still believe we're in a bull cycle. Obviously, the bull cycle has been a lot more concentrated in Bitcoin versus a lot of the other altcoin sphere. And at the end of the day, right now, we are experiencing a lull in liquidity fiat money generation. In the United States, obviously, I believe that Trump investors are consciously trying to cause a recession, or at least the appearance of a recession, so that the Federal Reserve becomes on their side and lowers the price of money and increases the quantity of money. And also, if you think about it, right, regardless of whether you think, the political side of things, if there's a lot of fraudulent payments within the system and you want to get rid of those before you move higher, you can clean up the dead weight. And obviously that's going to have an economic impact. They're okay with it because they're doing it in the beginning of their administration versus, in 2026 before the elections. Oh no, let's go reform the entire government. The voting population is going to be very skeptical of that and say, oh, that's Trump's fault. That's Vessen's fault. That's Elon's fault versus there's probably a way that they can spin this as this is Biden's fault. This is the Democrats' fault. Again, whether or not you believe that doesn't really matter, but the markets, they're cleaning out the dead wood. And then they're going to reflate and they're going to print more money than probably anyone's ever printed before. You move over to the EU, right? I don't know if the Greens are going to come on side with the ruling parties in Germany to do this, constitutional fuckery to allow them to print as much money as possible to build weapons and rebuild their army. But if they don't do it this way, they'll do it another way. The sentiment is there. Europe wants to rearm, ostensibly to fight Russia. But, they just want to spend more money at the end of the day. And so if it doesn't happen now, it'll happen later. They want to reflate. It might not happen in the next week to save your leveraged long position in whatever you own, but that's coming at least within the next 2 to 3 years. China is just waiting. They're going to have some sort of agreement with the US and the rest of the world on how they want to reshape the global economy. Could be good, it could be bad. I don't know what it is. But once that agreement or, we're just going to go our separate ways, whatever that is, they're going to reflate as well. So they're waiting in the sidelines. And then you have Japan, where the BOJ is trying to raise rates. We'll see if they get there or not. But at the end of the day, they're not trying to add more liquidity into the system. So you have the four major blocks, either trying a bit of austerity to clean up the dead wood, or in the process of reflating their economies. And we're in this period where we expected all this, you know, policy goodness and, Trump's going to do this and do that. And he might end up doing these things, but at the end of the day, it was liquidity negative. And so now we're seeing the markets finally react to that. I think in the third, fourth quarter of this year, through 2028, we're going to have a massive money printing situation, right? America first, my nation first is inflationary. I need to rebuild every single part of my supply chain within my country to give jobs to people because they're losing them to robotics and AI, and to have resiliency in my defense space. That's massively inflationary. There's not enough private capital to fund it. They're going to print the money. And then you have essentially a declining population and this sort of robotics AI thing. How that plays out, I don't know, but politicians need votes. And so they're going to print money to make sure that people feel okay. Well, the economic system, maybe whatever humanity is in and of itself, changes as well. Again, massively amounts of money printed. And then you have to service all the debt that they took off from COVID into the present. The US pretty much doubled the debt in existence, and every other country printed money as well. So again, this is a short-term pain. We're clearing out the dead wood. We had a great run from 20,000 to 110 on Bitcoin, essentially, FTX lows until, Trump coin. And now we're having a 30% correction. It's pretty normal for a bull market. So I think, yes, people might have had a little bit too much leverage. Maybe they bought too many shit coins. But I think we're going to clear out all that dead wood. And I still believe that we could be 250,000 Bitcoin by the end of the year. Does that mean that the particular shitcoin you own is going to be 100x higher? I probably not, because people are getting a little bit more discerning in the type of things that they own. But at least from Bitcoin perspective and the overall market capitalization of crypto, I think we're going to be much higher by the end of the year than we are today.
Despite the recent 30% dip in the cryptocurrency market sparking concerns among traders, experts are calling this a normal and healthy correction. Arthur Hayes believes the current market volatility is just a short-term phase. He's optimistic that Bitcoin could soar to even greater heights by year-end. However, for the market to regain its strength, Hayes emphasizes the need to weed out speculative assets and suggests that expanding the money supply could help drive prices up. Hayes points out that sharp declines, like the current 30% drop, are nothing new in previous bull markets. These corrections are natural, clearing the way for a stronger market by eliminating weaker projects. This process ultimately helps build a more resilient cryptocurrency ecosystem. According to Hayes, such fluctuations are actually a sign of a healthy bull market. The surge in leverage and interest in risky assets often triggers these price swings, but they don't derail the overall upward trend. As he sees it, Bitcoin's path to new all-time highs remains intact, and by the end of the year, the market could see fresh peaks following this correction. Let's watch more clips from the interview.
So I think first what's going to happen is, let's say we go to 70,000 or whatever it is. We need to see S&P at like below 4,000, 30% correction in the NASDAQ, something like that. Because at the end of the day, the U.S. government needs the stock market to go up to make their finances. That's what the game is about. And so we're not going to see anyone fail or any financial stress until that shakes out. And there's going to probably be some bond market things and some currency things. Something's going to happen. I don't know where it's going to happen. Could you have predicted that Silicon Valley Bank and Signature Bank and, they were going to go bust within 2 weeks of each other? Probably not. Wasn't what you were thinking was going to be the cause of, the bank term funding program and, $4 trillion of spending that pumped Bitcoin up 5x from that point. I don't know what the thing is going to be, but I tell you what, S&P down 30%, the 10-year could go to 2% or it could go to 5%. One of those moves, somebody's going bankrupt. And the Fed's going to come in, systemic collapse, Sunday night. Oh my God. And it might not, maybe it won't be straight up QE. Maybe it's first, we're going to end QT, or we're going to give the supplemental leverage ratio, or, there's some arcane thing of the Federal Reserve Act that allows them to print some money and give it to somebody. And then, then it's go time. And then I know, okay, there's a religion. Then I know China's going to come next. Okay, PBOC, let's go. Then Europe's going to go, okay, we're going to print some bonds so that we can go fight Russia and lose. Okay, boom, there you go. And then it's time to go. And then, so, I think Bitcoin is going to bottom before equities. And then if equities are really stressing or the bond market's stressing, Bitcoin is going to start outperforming because it's going to say, okay, now we know the response. When there's financial distress, they always print money. It doesn't matter what the political leanings, left, right, center, print money. This is the system that we're in. We need the stress. We know what the response is. Survive the stress, profit from the response. And so that's our goal as crypto investors. It's not looking to go, we're going to go to 70,000. All of a sudden there's a Sunday night emergency Fed meeting and they're back at 110 on Monday. No, like you're going to know. Like, when the bank term funding program happened on a Sunday night and Treasury and Secretary Yellen came out and said, okay, we're creating this new program.
Right.
Bitcoin rallied at 2 or 3%, but it went up 5x over the next, year and a bit. Okay. So like you have time. There's no reason to try to catch a knife. Okay, I didn't get the super liquidation wick on my particular asset, crypto asset of choice. Don't try to hit that. Wait for them to tell you when it's time to buy. And they'll tell you exactly when it's time to buy. You might miss out on the first 10% or 15%, but you'll get the next 5x without losing 50% of your stack trying to figure out when they're going to start printing the money. They're going to tell you when to print the money, and then you know what to do.
As Bitcoin and other cryptocurrencies show signs of struggle amidst market volatility, Hayes' insights into potential governmental responses and the subsequent impacts on Bitcoin become particularly relevant. His theory suggests that significant financial downturns in major economies could lead to aggressive monetary interventions, which historically have included measures like quantitative easing and emergency monetary policies, potentially boosting Bitcoin prices as a fallout response. Recent reports indicate fluctuating crypto prices, with Bitcoin hovering around $85,000 and altcoins like Ethereum, XRP, and Solana showing mixed responses. This market behavior echoes Hayes' scenario, where traditional financial systems face stress, prompting a flight to decentralized assets like Bitcoin. The news of a potential increase in U.S. governmental involvement in Bitcoin, with plans to acquire substantial amounts through a strategic reserve, aligns with Hayes' predictions of state-led interventions to stabilize and potentially capitalize on blockchain technologies. Hayes' analysis suggests that while immediate market reactions to governmental actions might be subdued, the long-term implications could be profoundly transformative for cryptocurrency. He posits that these actions are preparatory steps towards managing broader economic challenges, including leveraging cryptocurrencies to enhance national economic strategies. As the U.S. and other nations contemplate deepening their engagement with digital assets amid ongoing market and geopolitical developments, Hayes' views underscore a critical juncture at which traditional financial systems and modern digital economies might increasingly intersect, driven by opportunity and necessity in a rapidly evolving global financial environment. As we wrap up, what role do you see for Bitcoin in stabilizing global financial systems during economic downturns? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.